Well, it's a real challenge. You know, it's a problem that has been accelerating over the course of the last couple of decades. We continue to see losses from weather-related events continuing to get more expensive, and it's not entirely because of socioeconomics, people moving into these more vulnerable areas, but it's also in combination with the fact that events are simply becoming more intense as they occur. Now, for insurers, that's a real challenge because people are moving into these highly vulnerable areas, areas historically where we know that they have occurred. And of course, that has led to some real challenges in terms of how you insure it, how you price it, and whether or not some of these areas are going to maintain insurability in the future. So this is a really important topic that is really generating a lot of interest.
So then how do people decipher whether an insurance claim should come under the correct classification, whether it's act of God versus national disaster, or flood, or et cetera?
That's a really tough one as well. You know, obviously, if we can see the events occur, if we can see a storm, a fire, any type of weather event occur, that's a bit more than an act of God. Since we've seen it before, we know they're going to happen again. But if they're going to continue to have a climate influence and be more damaging when they occur, then we got to start thinking about where we're allowing people to live. And if they are going to live there, are they living there smartly? Are we building up better? Are we ensuring that the structures that are there are able to withstand the assumption that these events are going to become more intense?
So then just how high are the costs going to be for people who do live in these high stress locations?
Well, unfortunately, when it comes to insurance, you have to price for what the risk is. And there are certainly, you see states like California, which have enacted mandates after these events, which have cost, very high annual payouts, especially around wildfire, where they have to at least offer these policies to people living in these high-risk areas. But insurers have to take a step back and recognize that the risk is continuing to get more serious. And we've seen this historically in Florida in the early 2000s, where a lot of insurers did pull back, and that really depended on the state markets coming in and providing a level of insurance. So there's a lot of opportunity for public and private engagement.
So then are we nearing a time where insurance companies might simply stop offering policies in places like California and Florida?
Well, we certainly hope not. Obviously, insurance, it's a business, and they're not going to, put themselves in a position where they become insolvent. So you have to properly price. So in order to have a backstop, it's going to be really important to have these insurance pools, essentially, that are set up acting as a stopgap measure. So when these events do occur, if folks unfortunately do not have insurance or they don't have enough insurance, that there is going to be some money available to help people get back on their feet, because inevitably we know that the next big event is just around the corner.
And certainly this is a holistic approach. Obviously, you have some people talking about prevention, and then insurance kicks in after the fact. So in your estimation, where should it start? Should it start with insurance companies perhaps stopping some of these policies in stress locations, or is it a case of insurance companies stopping doing business with some of these carbon-intensive factories that trigger some of these things with climate change?
Well, I really think it requires an all-of-the-above approach. I think we have to see more of a public and private partnership. You have to have governments working with the private sector, with asset managers, with real estate investors and folks, just to really make sure that we're building smart and we're spending money up front to try to mitigate the risk, because we know we can't eliminate it completely, but the old adage, you got to spend money to save money, that really is true here. And we know that as disaster costs continue to go up, it may become, worth doing a cost-benefit analysis to see that if we spend modernizing our infrastructure, retrofitting properties that are already there, and the new construction that they're built up the code for, to be able to withstand the next major event.
So then with areas that were previously not considered stress locations now starting to come under that category, what is that doing to the insurance industry?
Well, it's forcing, taking a step back. I mean, one of the challenges around climate change is that, these are impacts that we're expecting to be seeing over the course of several decades, but the standard insurance policy is only on a one-year basis. So you're having to price in what you assume that climate impact may be over the next 365 days. And that's not very easy to do. So the industry is turning to more tools, different types of modeling tools, trying to find updated mapping to really start to communicate the risk, not just to our clients and the prospective clients, but also working in tandem with governments to really identify where the risk is starting to emerge and what we can do to try to mitigate it before it gets even worse.
So then just very quickly, we have about 30 seconds. What kinds of conversations are being had about really addressing the larger impact of climate change on policy writing? Could we perhaps see fewer insurance companies? Could they perhaps start to try and consolidate?
Well, in terms, you mentioned before around carbon pricing, we are seeing more and more, not just insurance companies, but different types of investment companies that are starting to say that we're not going to do business if you, are dealing with fossil fuels. And that, as we know, that's the main driver of climate change. And you tie that to more exposure, the risk is going to go up. So, identifying sort of the source of the problem is a good place to start.
All right.